Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 4th, 2026, and we're diving into Old Dominion Freight Line's fourth quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Old Dominion is a major player in the North American LTL motor carrier industry, and their latest earnings report provides a lot to discuss, especially given the current economic climate.
Revenue and profitability overview. Let's start with the top line. Old Dominion reported a total revenue of $1.31 billion for Q4 2025, which is a 5.7% decrease compared to last year. John, what are the key factors behind this decline?
The decrease in revenue is primarily due to a 10.7% drop in LTL tons per day, which was only partially offset by an increase in LTL revenue per hundredweight. This reflects a challenging operating environment where volume declines have impacted overall revenue.
Despite the revenue drop, the company maintained a strong operating ratio of 76.7%. How did they achieve this?
Old Dominion has been very disciplined in managing costs. They focused on cost-based pricing strategies to offset inflationary pressures, which helped maintain their margins even as revenue declined.
Dividend and shareholder returns. Old Dominion announced a 3.6% increase in their quarterly cash dividend to 29 cents per share. What does this signal to investors?
This increase is a positive signal, indicating the company's confidence in its cash flow and long-term financial health. Despite the earnings decline, they are committed to returning value to shareholders through dividends and share repurchases.
They also repurchased $730.3 million worth of shares in 2025. How does this fit into their overall capital strategy?
Share repurchases are a way to return excess capital to shareholders and can be a sign of management's belief that the stock is undervalued. It also helps improve earnings per share by reducing the number of shares outstanding.
Operational efficiencies and future outlook. John, Old Dominion has managed to increase their LTL revenue per hundredweight by 4.9%. How significant is this for their operational efficiency?
It's quite significant. This increase shows that Old Dominion is effectively managing its pricing strategy to counterbalance cost inflation. It reflects their ability to maintain service quality while optimizing revenue per shipment.
Looking ahead, they have planned capital expenditures of $265 million for 2026. What are the key areas of investment?
They plan to invest in real estate and service center expansions, as well as in tractors, trailers, and IT infrastructure. These investments are crucial for supporting future growth and maintaining their competitive edge in the industry.
CEO insights and strategic direction. Marty Freeman, the CEO, emphasized the company's commitment to revenue quality and cost discipline. How does this align with their strategic direction?
Freeman's comments highlight Old Dominion's focus on maintaining high service standards and disciplined financial management. Their 99% on-time service and low cargo claims ratio are testaments to their operational excellence, which supports their long-term growth strategy.
What can investors expect from Old Dominion moving forward?
Investors can expect continued focus on strategic investments and maintaining service quality. Despite the current economic challenges, Old Dominion is well-positioned to capture market share and drive profitable growth over the long term.
Key takeaways. In summary, Old Dominion Freight Line faced a challenging quarter with declines in revenue and earnings, yet they managed to maintain strong service metrics and increase their dividend. John, any final thoughts?
Old Dominion's disciplined approach to cost management and strategic investments positions them well for future growth. While the current environment is tough, their focus on quality and efficiency should continue to drive long-term value for shareholders.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Old Dominion's performance in the comments below.